Good day, traders. I trust you're all well. I've had a bit of an interesting request, which I am going to indulge in, and that's been to look at the currency. So the trader said, please have a look at euro versus the dollar. Excuse me. Please have a look at euro versus the dollar and just walk through from the Asian session. I shall do that for you. Just a quick look. The other thing was gold. I don't think I'll have time to get to gold, but if we do, we'll look at gold on the 15-minute chart. So if you trade in euro versus dollar, currency pair, I think the thing to bear in mind that this is where the request came from, is just to show that, your price action patterns are exactly the same, whether you're looking at just look at any index, or you're looking at a stock, for those that are trading stocks or crypto or whatever, looking at the very same thing. So I haven't done all my usual markups here, so excuse me for that. But what I can do quickly is we can just quickly show you the open of the day. Open today. By the way, if you are in Wednesdays at the market, please have a look at the Telegram channel. We've got a lot of news coming up, and I've just, put a comment or request in there. Okay, so here's the open of the day on euro. So imagine this is all you're trading. Okay, you're trading the Asian session. You would have noticed that the high of yesterday was up here. Okay, I need to work a little bit fast so we can get through this high of yesterday. Okay, so that's the high of yesterday. Of course, the low of yesterday. Now, these are key levels that the market is going to look at, of course, because the bulls want to break out above the high of yesterday, and the bears want to break out beneath the low of yesterday. So other things I could put in, but I'm going to do that: midpoints, measured moves, etc. So right from the open, at that level, which was the high of the US session, so we had a bull breakout right towards the end of the day, is a key level to look at, and you can see you would have marked it off. I hope you would have marked it off as you start your day. So that's a key level. But of course, you start your day here, you've got the bear candle, and you have to look at what's just taken place, previously. So big bull breakout, you kind of expect that the bulls might have a little bit more momentum going into the day. I just want to do that. Okay, so in here, after that failed breakout, bear candle, although we had a big bull move, you wonder if we're going to have bullish strength, and we have. At some point, this was a big bull candle, bear candle, of course, and brought into the end, followed up by bulls. Now, if you want to jump in into this particular market, I think you got to be looking at your stop's got to be down here, of course. Okay, let me not say of course, but you put in your stop down here beneath the open of the day. That's a decent enough place to put your stop in. So somewhere within here is your stop. Others would put and say, even if I buy in here, I'm not too comfortable with this as a stop. I want a bigger stop. You can go and put a measured move stop somewhere down here. But you then open that at least to get to 1-to-1, you get a similar move. So if you're buying above any of the bull candles, at least your stop should be here. And you got to be cognizant, of course, of that level. Market gets here, fails, and tries to go sideways. Now, when you start to see this, for me, it's perfectly okay to say, I think I have a failed breakout. The bulls are not strong enough. I'm seeing bearish strength. Maybe the bears will continue to sell off. You can have one of two options: tighten your stop to wherever, whichever of the candles you've bought to just below, like that's a key level, and hold on to it, or you can exit and then wait to see if you get a double bottom or anything else later on, if you're going to still be buying. We get that. Now, here's what's interesting about this level. Yes, a double bottom, but that's not a good signal. We tried to break out beneath it. We failed. The bears come back again. And remember, they're testing that open, that magenta line. So in here, if at all you're thinking, well, okay, double bottom has failed, I need to sell, you're going to be thinking, where do I put my stop? This is where this high comes in. Okay. You can't, or you could put it here, but you got to look to the left. And any stops that you're putting, if you're going to be shorting, it's going to be as high as possible. I had a similar event on DAX. I had a stop right up here, at above the open of the day. Hopefully we can look at it shortly. So here we then have double bottom, failed double bottom, and you have a huge bull candle. I didn't check if there's any announcements that could have been taking place. So my apologies if there's any news announcements, etc., taking place there. But you get a huge bull candle. Now for the bulls, if they're still thinking that there's more momentum up, this is a candle that if you're a bull, if you are prepared to keep your stop down here, you can go and get in. But the problem is you cannot ignore this high, okay, because you might get a failed breakout. Bulls might accelerate above it. So you could buy above that, but still, you need a stop that level there. If you want a wider stop, which I don't think is necessary, you could do that. Alternatively, you could just look at the most recent price action and say, okay, so, this little trading range here, or I can put it above there. There's my stop, still almost the same stop as the open. You buy and you're hoping to see if you get acceleration. And then you've got a hold, breakout, pull back, quite deep, but you're relying on the bulls coming back in. They do come back in. Now, at this stage, I wouldn't buy this. I would only think of buying if I get another higher low double bottom. Okay, and you don't get quite anything that sets up neatly for us. There's always another case, two cases, two sides to the story. So right now, we'll talk about the bears shortly. So you're looking, okay, I want to add in again, and I'm trying to look for a double bottom. Doji is problematic. Doji is problematic. Yes, you have a bull candle, but again, if you have a look, buying above this, you're buying above dojis. So if you do that, you must expect that if it fails, your stop is going to get hit. If you have a stop here, then you need to hold on. But now, because of this weak price action and the reversals, if you're still holding onto your longs, I would be getting out. Why would I be getting out? Because I have a test of that previous high of the US session. The high of yesterday is quite high up. I have a failed breakout above it. So, I talk of if you want to get out, you must get out or hold on. If you don't, you must be comfortable getting stopped out. I know it's quite frustrating, but sometimes, you're trying to make a decision and you can't make a quick enough decision, then you are going to get stopped out. So now for the bears, they're also seeing what the bulls are seeing, failed breakout, bulls failing. So bears are going to be thinking of shorting. Some bears might want to be shorting that. If you're shorting that, you're taking an early reversal trade. Again, the same kind of thinking that we've kind of had. You're going to put your stop above the nearest technical level, which is here. But there is the high of yesterday. So you can do that, or you can just look at that little pattern to take you same place. Put your stop above there because, you're shorting, but the bulls might just come back and accelerate up. So if you get stopped out there, that's a decent place. That's a decent place to get stopped out. So if you're still in as a bull, when you see this, I mean, you are going to see this, and sometimes I see that and I say, oh, maybe the bulls will create a trading range. But then you must know that you got bears in the market, and the market can just sell off and you get stopped off. So bears will be selling here, bulls will be getting out. If bulls don't get out, and they kind of see this and think, well, maybe we'll accelerate up. When you see that failure, if you're a bull, you got to be concerned getting out, or you're going to get stopped out. If you are a bear and you haven't taken any of these trades, that's a decent one to take. But if you're taking that, your stop is still going to be up here. Or, you hold on to, your stop is still up there. That's the first trade you take, or you scale in and add another trade. Then we get a bit of a sell-off. Now, we are getting, so the Asian session is kind of coming to a close within this region. I was looking at the times there. Get a tight trading range. Now, here's where it becomes a little bit tricky. If you've been selling here and you have a trading range broken beneath the open, when you come to the end of the day, you can say, man, if I'd held on to that, I would have made all this money, which is true. But remember, you're making your decisions moment by moment. So when you see in that, and that's a stop, you most likely will be trailing your stop down, and maybe put your stop here, so you're going to get stopped out. Or, if you're going to work, maybe that might be a reason. You take your stop, and at some point you've got your parameters, and your stop is now at break even. You may not have been stopped out, depending where you went in. Okay, but assume you got stopped out, and you see all this bullish price action. Bulls might have tried to jump into the market within here, looking for higher lows to jump in and keeping the stop here, or stop at a measured move of that trading range. You might have the stop here, and the market does accelerate up. So bulls would have been fine. But at the open of the day, key level high of yesterday, bulls tried to break out. They failed, decent enough reversal. If you are a bull, again, either hold on to your stop or decide bears are taking over. If you are a bear, it is always better to try and wait for a pullback. Now, there is a breakout, there's a pullback. The reason I say that is if you take a first breakout trade, the market pulls back, gets stopped out, and it comes back and immediately goes your way. So that can be quite frustrating. So if you can wait for a pullback. Tight selling into the morning European session. And in here, maybe we've trailed your stop down. Again, you get stopped out. And then what happens? Decent enough reversal. You can't jump, or you can jump into that with a tight stop, or you can wait for a pullback. And that's what can be quite frustrating. Now, so that's the request was to look at the Asian session. Okay, so I've kind of looked at that. You can trade quite successfully the Asian session. Just picked up one. Unfortunately, don't have time to go into gold. I want to just talk about this index. Here's an interesting one. Just what we spoke about earlier on. So there is a breakout that took place. Bulls might have been thinking, well, we might get a reversal here. And, we didn't get a decent enough reversal. So the way the bears have a breakout, if you sell beneath here, you're going to be comfortable that a pullback might come and then hold on to it, or you wait for a pullback. So I'm presently waiting to see if we can get a decent enough pullback. If this becomes like a 2-bar reversal, that might be worthwhile to sell. If we pull back even further, test of the 20 EMA might be better to sell. Bears are pretty strong in the market. And so market pretty bearish at the moment. Best to wait for a pullback. The problem with today is we have news announcements, 8:30, 8:30, which is sync time, 3 of them. And the market is going to be doing interesting things, especially, as we go to the top of this present hour. So you might want to be careful or wait until after the news announcement, which is probably a little bit prudent. Or if you're prepared, just use wide stops or go in and out, that's perfectly fine. All right, guys. So again, if you are Wednesdays in the market, please have a look at the Telegram group. drop me a note or thumbs up within there. All right, guys. Thank you very much. Appreciate it. So in the meanwhile, let's wait and see if we get pullbacks. Okay, Malon, thank you very much.